Welcome to the deep dive. Today, we're tackling this recent market dip. It looks simple on the surface, but there's actually a lot going on underneath.
That's right.
Our mission is really to simplify things, to cut through the noise surrounding the tech pullback. We'll pull out the key reasons why things happen using our research so you get the core story without feeling overwhelmed.
Exactly. And what's really interesting is how it's primarily this tech and AI story, but amplified by some specific economic news and, well, policy whispers too.
Policy whispers.
Okay, yeah. So we're going to break down those concrete reasons for you, showing how these different pieces actually fit together.
All right, let's dive in then. First up, this AI and tech profit-taking we saw. Some big names, right? And Nvidia, Palantir, they really led the sell-off.
They certainly did. Big momentum names.
So the Financial Times, AP News, they talked about investors repricing frothy AI winners. What does frothy actually mean here? Is it just, normal profit-taking after a good run?
That's a really good question.
Yeah.
It's a bit of both, actually. Profit-taking is normal, sure, but frothy points more to the valuations.
Ah, the price tags.
Exactly. Some of these AI leaders were trading at super high multiples, like 50, 60, maybe even 100 times what they might earn way down the line.
Wow, okay. That's steep.
Yeah, really steep. That kind of valuation usually belongs to tiny startups with explosive growth potential, not massive companies already leading the market. So investors aren't just cashing out, they're recalibrating, thinking more about sustainable value, not just growth at any cost.
That makes sense. So less about blind excitement, more about, actual near-term value. And that links to the next point, doesn't it? This cooling AI narrative.
It does.
Doubts creeping in about whether generative AI investments will pay off quickly. Why now? Why the sudden skepticism after all the hype?
Well, it's that classic gap, isn't it, between the initial excitement and the reality of making it work.
Right. Implementation hurdles.
Exactly. New research, even comments from leaders in the field, are suggesting, hey, maybe the immediate ROI, the return on investment, isn't quite there yet. Companies are seeing the high costs, the need for specialized talent, sorting out data. It's complex.
Yeah.
So the long-term promise, still huge, but that quick payoff, maybe not as easy as hoped, that naturally dampens the mood a bit.
Okay, but it wasn't only about AI, right? The wider market got spooked by some economic data, too. That July Producer Price Index, the PPI.
Oh, yeah, that was a big one.
It jumped 0.9% in a month. That was a surprise. Why did that number, the PPI specifically, hit market sentiment so hard?
The PPI is like an early warning. It measures costs for producers. When their costs jump like that, it often means higher prices are coming for us, the consumers.
So inflation fear is bubbling up again.
Precisely. It was a sharp reminder that inflation isn't necessarily gone for good. It can flare back up.
Yeah.
And that immediately makes traders rethink the Fed.
The Federal Reserve, right. Less chance of big interest rate cuts anytime soon.
Exactly. Less chance of what they call aggressive easing. That uncertainty about future rates, it just dials up the market volatility. People get nervous.
And nervousness connects to policy, too. We had those headlines about potential semiconductor tariffs, talk about hitting a key sector.
Definitely. For chips, an incredibly global industry, tariffs are a major headache.
How does that translate directly into stock prices falling for chip makers and the companies that supply them?
Well, it's uncertainty, first off.
Mm-hmm.
Tariffs can mess up supply chains, raise costs for materials, make the final products more expensive, which can hurt demand.
Okay.
So it creates this fog. Hard for companies to plan. Investors hate that kind of policy risk, especially in such a vital, interconnected sector. So they sell first, ask questions later sometimes.
And speaking of broader policy, all eyes are on Jackson Hole, Fed Chair Powell's big speech. Markets seem nervous, trimming risk beforehand. What are these Fed path expectations that people talk about?
Basically, it's the market's best guess, or maybe hope, for what the Fed will do with interest rates over the next year or so. How many cuts, when, how deep.
Right. The expected roadmap.
Yeah. And the market has, largely priced in a pretty positive scenario, expecting rate cuts down the line. So Powell's speech, it's critical.
Even a small change in tone could matter.
Hugely. Any tiny tweak, any shift in emphasis between fighting inflation and supporting growth could completely change those expectations. So traders get cautious, reduce their bets, just in case he says something unexpected.
Got it. And lastly, there's this sector rotation happening, people moving out of those high-flying growth stocks.
The ones valued on future dreams.
And into more defensive plays. What are those typically? And why the shift now?
Defensives are usually things like utilities, consumer staples, companies selling everyday necessities or healthcare. Stuff people need regardless of the economy.
More
Exactly. Investors move there when things look uncertain, like after some mixed earnings reports from retailers or other sectors. They want stability, predictable income, rather than betting on high growth that might not materialize.
And when the big tech stocks stumble?
They drag the whole market down, yeah.
Yeah.
Even if other areas are doing okay, it's just their sheer size. So it's a bit of a flight to perceive safety within the market itself.
So, wrapping this up for you, our listener, what looks like just another down day in the market, it's actually much more layered.
It really is.
You've got the AI reevaluation, the profit taking, those inflation jitters popping back up, worries about tariffs, the Fed, all these distinct threads weaving together. Understanding them individually really helps make sense of the bigger picture, cuts through the confusion.
Absolutely. And it leads to the final thought for you to consider. With all these different pressures swirling around the AI reset, inflation signals, policy risks, Fed watching, what specific signs or news will you focus on next? How might these factors keep interacting? That's the ongoing puzzle the market presents. What's on your watch list now?